Good turnaround Tuesday, everyone. How are you Warriors doing today? Sinatra, Saloom, you have a rocket ship. What's that for? Hi, Mike. Bran, how are you? AJ, Ryan's back. Good. Glenn, James, Kman's here. Blake, we have a full team. Hi, Kurt, Ingmar, Simon, how are you? Oh, SPX, the rocket ship. Okay. So, Ryan, are you back in the saddle? Yeah, views.
Don't know about that. I think I'm strapped to the range, being dragged behind the horse at the moment. That's how I feel after this weekend. But yeah,
Oh, okay.
back at the
So,
decks
yeah,
in spirit.
why don't we start off? We had a little bounce in euro, and the low last Friday was 78.6 back. You think we're going to go for these lows again, or
Yeah,
we might?
I think it's very possible. There's a little bit of easing of this French election rhetoric from Le Pen and her mob, so that might have eased tensions a bit. But I don't think we're out the woods by a long way, shape, or form.
Okay. One thing I did notice the past 2 days is that EG looks like it's putting in some type of bottoming formation. I don't know if we're gonna maybe just go from here back to the breakdown or something, or we'll pull back at one more low or a right shoulder. So
Yeah.
has your view changed on that for a possible low?
No, it's obviously with the Bank of England coming up and the CPI tomorrow. It's going to be important. We're pretty much bang in the middle of two levels. We've got obviously the big break point at 85, 84.80,
Yeah,
and now we've
yeah.
got that confirmed support at 84. I'm siding with maybe getting a little bit long into tomorrow's CPI data. I feel that there's more reasons stacking up why the pound sells off a bit than it is why it gains.
Okay, and your expectations for BOE?
I think there's potential for them to move to a cut on Thursday if CPI is really weak. At the worst case, I think they give a good intention to go in August via the votes. So that's what I mean. It's even if CPI isn't as low as expected, they could still signal that a cut is coming. So that limits the pound gains.
Okay. You have any levels? I have the 26 levels being pretty important.
Yeah, yeah, it's big figure
See,
tennis for this one, isn't it? It's we're holding below 127 now. 126 is the next one, then we know what 128 is like on top.
yeah.
He had that breakout and then couldn't get back above. So yeah, ranges, mate.
Okay. Thanks, Ryan. Well, it's great to have you back.
Thanks, mate.
Good morning, K-Man. So
Good
your
morning, Dale. Good morning,
yeah,
everybody.
so your vibe was, we talked about how stiff the end was yesterday, and it tried to sell off. Um, but here we are again,
Yeah,
back above last week's highs, or trading right at them.
yeah,
What
we're
the?
trading at the Bank of
Yeah,
Japan high, post Bank of Japan highs.
yeah.
I'm
So
actually, yeah, I still have my call running and for another couple of days, and I actually bought some in the middle of my night after seeing that nothing changed post those UEDA comments, and but I'm not, I haven't got anything that's going to put an account in danger. Let's put it that way. I'm still relatively
okay,
small in position, but. It's just doesn't want to hold down. And you look at the, as I keep on repeating, look at those yen crosses, and they still don't want to stay low.
yeah,
That's the thing. That's going to be the key. Is if we when we get yen strength, it has to keep its strength, and for the time being, that's still not the case. So yeah, we're still a
okay,
month, nearly a month and a half away from the next Bank of Japan. I think I don't know when they will have the meetings with the market about their potential JGB buying cuts. We should hear some news of that before. So I expect, as we usually do into the next Bank of Japan, to get some speculation, perhaps the yen a bit higher, but before that, there's still a lot of sushi to be eaten in the Bay of Tokyo.
Okay, so just want to say good morning. Hi, Ryan. We'll take a look at Canada for you. Marcus, Paul, morning. So, one thing that I've noticed is, again, correlation breaking down. Here's yields, and the
Hmm.
yen is completely ignoring this decline in yields.
Well,
Comment.
it ignores it when it lags. So, sometimes yields can go up and down, but it's the differential that matters, right? And
Right.
the issue that we have with the yen is that the market is very reluctant to buy into the next hike. You already said that even a July hike is possible, but if you look at then the JGB yields, they are not following suit. We had this first leg higher in just taking the 10-year JGB as an example, up to above 1%, but now we are still holding below 1%. So I think there is your next hint. If JGB yield starts to rise again and the market buys the fact that the Bank of Japan can hike, that may be your next moment when the yen can strengthen a bit. But until then, this is not looking like the market is on board with too much yen strength right now.
Okay, we'll get to Canada. Um, I think it's pretty impressive, even though I still think we'll get a little bit more downside in Aussie, how it's holding up with copper getting decimated in the last month.
Well, we did have the RBA last night,
Okay.
Dale, and so the RBA, even though they left the rates unchanged, they did. There was some chattering about rate hikes. So
Oh, wow.
when they're chattering about rate hikes, that means that rate cuts probably aren't on the table. So that's what kind of supporting the Aussie overnight.
Okay, interesting. Overnight, yeah, but compared to copper, I haven't looked at China. I don't have the quotes. I wiped out all my quotes last week, haven't replaced them all, but still pretty good relative strength in Aussie. Well, Ryan wants to know about CAD. That's why he showed up and actually said something. So he's thinking USD CAD breakout coming. Want to go to you on this, Blake? Are you in that camp? I mean, I think we could still rally up here, but a breakout, I don't know about that.
Yeah, this is and even I said this during the week ahead video. I really don't have much of a bias other than I'm a Canadian dollar bear, but I'm not
Okay.
sure if I need to be I'm not sure about being a US dollar bull either, at these levels.
Yeah.
So it's a hard one. Above 138 I think gets kind of bullish, and then back below the 200 DMA, and I'm not so sure about that anymore.
One last thing, and then
Oh.
I'll hand it to you. Is that see where silver's holding on the daily?
Oh yeah, it's flat. It's
It's
the flag support 50 DMA. Yep.
yeah. I mean, it's pretty critical there. I think we could. There's some air underneath that if it doesn't hold. So I just wanted to point that out. And
Yeah,
also,
here I'll
okay, and
yeah,
also for
I'll take it
bulls.
over from here. No
All
problem.
right.
I'll revisit silver with you. I
Okay.
want to point out just a couple of things. First of all, ahead of today's data, we have retail sales, which is obviously going to move the needle. I mean, everybody's worried about the weekly jobless claims that we saw on last Thursday, how they ticked up, and obviously Thursday's data in the US is going to be pretty key. But seeing how the retail or the consumer is holding up in this environment is also going to be pretty critical. And you can see how the euros bounced basically to the 38% retracement. So, when
Yeah.
Ryan, and welcome back, Ryan. It's nice to have you back.
Thanks, mate.
When he mentioned that we could revisit the lows again in the euro, I think it's very doable, especially if the consumer continues to show some strength, which it's always hard, and we always laugh about it, is trying to bet against the US consumer is a really, really tough thing to do. And so whenever retail sales come up, just be a little careful. Stronger data, I think, pushes the euro back towards back below 107. Weak data, though, we'll breach that 107.40, which is a 38% retracement. A break back above that is going to allow for a further recovery. And when you're looking at, the euro sterling, that could put the euro sterling back at 85 pence. You got things that are working out there. But I'm going to go back to the Canadian. And Dale, this is why I get a little skeptical about the Canadian, is that you can see that we're near range highs, triangle resistance. We're going to need a pretty big dollar push to get the dollar CAD breaking out. You know what I mean?
Yeah.
Like I look at that, and it's hard to get super bullish up here, right?
Okay.
So
now I know what he's talking about as a breakout. It's a top, probably the top triangle line, the blue line you have there. Is that it, Ryan?
Yeah, it could be. And it looks, it looks doable. It looks doable, but we really have to see, some dollar strength come through the market. And I would venture to guess that we're going to have to see, in order for that to happen, we're going to have to see the euro trading back towards 105. So we're going to have to break this triangle support in the euro.
Yeah.
And you can see it's all going to break at once. I mean, if the dollar breaks higher against the Canadian, the euro is probably breaking below 106.50.
Yeah.
And everything else is, you have the Aussie that's, even though you have the, a little bit more hawkish RBA, we'll be trading back below the 200 DMA.
Triangles everywhere, Blake.
They are,
you put up is a triangle.
It is, and big, big trend lines coming into view. So yeah, I mean, everything is in a very, very tight range. And that's what makes me a little nervous about being short the euro down here, is just that we know it's around such critical support. So, and I think, when's the first French election? Is it the 30th? Kman, is that 30th? Yeah. So maybe we're going to have to wait till then to see if the dollar's real, or if the euro is really going to move, if the euro is really going to break or not. So,
well,
go ahead.
We heard some comments of Le Pen. She's trying to smoothen the angles a little bit, I think, to try and capture some of the other coalitions or the center votes right now. So she watered down a little bit on her really far right stance, and that's also part of the fact that spreads are coming down a little bit right now, but. Not sure if we have to wait until the 30th to get more tensions over there, because she will be touring France to gather votes, and I guess in front of her traditional voting crew or crowd, I guess she may pick up the harder line again. But yeah, we are not out of the woods, because it's not only France. There's some local elections, I think, in the east of Germany as well, coming up soon, and we know how they can veer from one side to the other. So I don't.
So she's dialed back her off with their heads rhetoric, and
Yeah, a
have
little bit,
a guillotine and the guillotine in the background.
and what the people were saying about Frexit, she tuned back on that one as well.
Okay, she wants a job. Okay, that's
There's
interesting.
money involved, huh?
Yeah,
You
definitely.
get paid
Power.
quite decently.
Yeah, it's amazing.
So, Dale, going back to your silver and precious metals. So you can see where gold's at, right? And gold, nice little triangle. You said triangles everywhere.
Yeah.
We have a little triangle just ahead of the really critical 2280 level, because if that level breaks, then you got a big double top, right? But silver, very similar type of situation. We're at really critical support here on silver with that flag pattern, and we're holding above the 50 DMA. So really, really big levels here too. And that's a scary thing, because if the US data comes in strong and we see, the like I said, the retail sales come in and they're just better than expected, the gold and silver might actually, start testing some pretty key support levels. So That I believe is a bit of a risk. You know what's been surprising to me? Today we have, or not today, this week we have the Swiss National Bank, and we have the Euro Swiss it's continuing to slide lower. What do you make of this move, Ryan? Kman?
Well, it's all in the balance, isn't it, for SNB? But again, the Euro Swiss looks like it's got a bit of risk and a bit of this Euro election still in it. But I'm keeping an eye on this one because if the SNB cut, then they could see a little bit of selling off in the Swiss in that one. That might be a rally that Euro Swiss traders look to hit on the back of the election stuff. But yeah, I think it's about. I saw an economist thing about 66% are looking for a cut. Market pricing is about 75%. So that puts the risk the other side if they don't cut. And we've seen inflation ticking up a little bit higher than they expected as well. That got Jordan moaning. But I know Kay follows this one more detail as well.
Yeah. So when you're looking at this, and Kman, we talked about this yesterday. How much pressure is the Swiss National Bank going to be to actually give us another surprise cut? And I know most people aren't believing that's going to happen, but I mean, if they do, obviously, what Ryan's saying, we're gonna actually see a reversal going the other direction. But how much pressure do you think they're facing right now with this?
I haven't seen those Swiss corporates starting to moan again since the Swiss strengthened by like over 3% versus everything since its lows. I don't know. I mean, it's really a 50-50 call on the S&P, But yeah, I mean, if the Jordan and his crew judge that this is not the way that they wanted it to trade, although he also cautioned against too much Swiss weakness when Swiss was at its weakest. He wants to keep it in a range, I reckon. But yeah, if there is pressure, but I haven't seen too much of it, he could come up with a cut, especially that they only meet like every quarter, right? They don't have like every month or so, month and a half meeting. So yeah, there may be some temptation to tell the market, listen, we are not the currency that you need to buy for safe haven, because I mean, Swiss completely taken over the safe haven play from the yen, right?
100%. I would just say that this week, if for some reason they don't act, which is more than likely,
We're going
and
back
we
to
continue and we continue to get some Swiss strength, I think I'm going to be a buyer of the Euro Swiss somewhere down here.
yeah.
Because you think about like the political situation, maybe it's not as extreme as people like to believe in Europe, and we get towards the European elections, and maybe you get a you get a little bit of buying coming in somewhere around the 94-cent level in the Euro Swiss. I might be willing to take a flyer on it there, because I did buy it here and then I ended up taking a loss, and I've been so surprised on this Swiss strength. It's been really boggling to me. So
yeah, if we see 94, I think that may be an interesting one there.
Yeah. So anyway, I think it's going to pay to be patient. Speaking of sterling, I know you guys have been talking about it. So this is it is trading heavy. We broke out of this channel, this ascending channel. 38% retracement comes in at 126.20. 20s, 25, I believe it is. You got the 50 DMA right there. You got the 200 DMA just below it at the 50% retracement. So, to me, false breakout leads to a breakdown, which should take us back to the middle of this triangle. The scary thing is, I think longer term is that, this false breakout technically should lead us all the way back down here. Like, that's what should happen over time. What could happen politically? And I'm asking you, Ryan, what can happen politically that could put the sterling really under pressure over the next couple months?
Me becoming prime minister.
That would definitely put the sterling under pressure. But what in the political sphere with the election upcoming, the Sunak situation, what could do that?
Yeah. Same as I've been saying, really only a real mess of an election, i.e. no clear winner. That would put the pressure on, which is still a risk. Everyone's expecting the Labour Party to win by a landslide, but polls are one thing, votes are another thing, and we've got to see that play out. And what might be a bit significant is if the Reform Party overtake the Conservatives. They're a relatively new party. And if they overtake the Conservatives, pushing the Conservatives into third place, that might get a few investors worried about the whole political landscape. But yeah, a hung parliament is the big price risk for the quid.
Got it. And I mean, are you guys like? I mean, you guys, I was, look at the British as more classy, minus you guys do scream at each other in Parliament and stuff. But I mean, how likely is it to contest an election or results like something that could happen here in the U.S.?
What do you mean? You've only got two parties over there, haven't you?
Yeah, we do, but I mean, how people get over here. I mean, everybody's like,
Yeah.
it wasn't a fair election, and does that happen over there in the?
No, it doesn't happen. I think the thing that we're going to see in this election is real voter apathy. I think the numbers are going to be way down. Everyone's just had enough of politics, no matter what side of the fence you sit on and where it comes from. They're all a bunch of liars, and they're all running around fighting fires from one to the other. And I think people are just losing faith in politics overall.
Yeah. All right. Well, let's shift gears away from FX and let's talk equities, Dale. So here's the S&P. We're at channel resistance, 161% extension. Our eventual target was 55.13, and whoops, wrong direction here. 55.13, and the extension there, we have gotten to about 5,500. We're about 20 points away. So what do you think? We continuing higher?
I haven't done anything yet because my short candidates, even with this huge move in S&P and NASDAQ, haven't gotten to my levels. Like if you pull up Amazon, I was looking for one more high in Amazon, and that hasn't happened yet. I was looking for a little bit more to the upside in the Dow, at least 61.8 back from its big decline, and that hasn't happened yet. So, and XLF, the banks, they're not making a lot of hay out of the lower yield scenario. So, instead of the whole market, I'm looking at individual stocks and ETFs that have not achieved. Okay, there you go. Is that?
That's the XLF.
Okay, yeah. See, so I'm looking for one more push up there.
Yeah.
Amazon, same thing. Would be 3 coming up there, and what was the other one? The Dow. So the Dow, at least 61.8 back, and it certainly hasn't done that yet. So, if they do it, I'm there. But I thought we'd have a chance for that to happen into expiration, which is this week. It still could, but see what I mean? I'd like to see 39.4, something like that. Uh, Relative weakness is amazing in the Dow. So if you get a top in S&Ps, you're actually getting a failing rally in the Dow.
This is a good ETF to look at. This is the XLG. It's the top 50 stocks that are powering the market, and you can really see, where the drivers are, in the whole market. That's you got your Apples.
Nvidia didn't go anywhere yesterday. It stopped at your 1.618.
It's actually a 261% extension.
Right.
Yeah, it's a 261% extension. I mean, yeah, but they're not pulling back. Just because they're taking a breath doesn't mean that they're done running either, right?
Yeah.
Yeah. So I mean, it's a real it's been a big move, Dale, and it's hard to it's hard to stand in front of
I don't think you could ignore the Dow and the Russell, and you know, everyone's talking about how narrow the advance is. It's really not that healthy, and I think Jim said you need a break in the semis for the market to come off. And,
Yeah, I agree with you. I do think it's unhealthy, but we could have had this same conversation. I've had the same conversation 3 months ago. You know, when
Yeah.
Russell 2000 couldn't break above 2050 right here. We're like, oh, look at this. It's so weak, and we just keep, it's nothing's moving. But here we are. The S&P is 10, 15, 20% higher than where it was several months ago, and the Russell 2000 is still just stuck. Right. So I hear what you're saying, but it's the same thing we've been saying. It's like, oh, this leadership is in one spot, and it's still the case. And so you have to respect it. I do think we're in an acceleration phase. It's still very scary because at any moment we could be in a blow off top type of situation. It's if you just kind of blur the little ins and outs of the market, you can just kind of see that we are just in an acceleration phase in the market, and it doesn't mean it can't stop, but it sure does look pretty bullish. All right, we have just a few minutes before retail sales, so let's go. I'm going to get ready for that. Ryan, what is number one on your radar today with retail sales, and what are you looking at specifically?
Just really how the dollar's going to react. This is the first major data point since the FOMC. And, as you said, sales are important for the consumer, important for the Fed, important for the economy. So let's see, the reaction's going to be telling. If it's a bad number, are we back in rally sell mode for the dollar? Or is it going to brush it off? And if it's good numbers, how much do we rally in the face of the fact that the Fed is not going to hike and they still want to cut? So, looking for the reaction since the Fed.
All right. Kman, what are you going to be thinking today? I know we have I think 20-year auction today. Let me make sure.
Yeah, but it's a bit of a strange one, that 20-year all the time. It used to be completely ignored, and now Yellen brought it back to the fore. Yeah, we have that. I mean, in case of a strong reading on the retail sales, that may come into play. Yeah, we have the IP as well, right? We have the industrial protection coming out as well in 3/4 of an hour. I think it's important enough today, the retail sales, it's the consumer. The Fed is watching it, so we should as well. If we get a strong reading, I think that dollar yen may push through to high 158s or so. If we get a weak reading, probably stuff like Aussie also worth having a look, and perhaps dollar Swiss getting another knock on the head. Those I'm watching. We're also close to support on the dollar rand. Got a little bit in that, but very, very, very small, as I was saying on the flow show as well. It's not something that I'm going to risk an account on. But we are at levels. So it's 18.10 or nothing.
Yeah, here's the dollar rand, and this is how important the support that that Kman's talking about. Really, really big support level. That's in the ForexAnalytix chat room. So okay, I hear what you're looking at. And I'm going to tell you this much. I think you just watched the euro. The euro on a weak number. Let's see how the euro reacts to 107.40, because a break above 107.40, you're going to see a continued recovery in the euro. On a strong number, the euro could be trading back down towards these lows. And remember, you've had enough of a recovery in the euro at this point that it might come back into play. And that because going back to the euro really quick, don't forget that this move and this bounce that you see here, let me just make this like that. Okay. The bounce that you've seen here has been only up to a 38% retracement. So it's been shallow enough. So as long as we hold below 107.40, the risk is still, that we trade back down towards the trend lows. So I think that this range, I'll just make it in red and you can see the whole thing. I think this range is, we could test the fringes of that range today, following this data. So it's going to be a rather important one in my opinion. All right, Dale, you have any last minute things you're looking at?
Yeah, I don't think USD CAD is going to take out that high 138.50. I've had the patience of Job with my short, and
Oh,
I'm
wait, the
short that
data's
I
out. I'm sorry,
go
guys.
ahead. That's okay. Go ahead.
A little bit soft on the first, yep, softer coming in all round. Headline sales 0.1, control group 0.4, a pip miss on those. So looking a little bit soft, yeah.
Yeah, okay, a little soft, but the
And
dollars had very mixed reaction. Kman, you talked about the dollar Swiss. The dollar Swiss did come off through some support levels. Matter of fact, this is kind of key for the dollar Swiss. Now we've seen how the euro, or excuse me, the euro Swiss was so weak, but take a look at this dollar Swiss. We just cracked through a really, key level of support here, in my opinion.
yeah.
So yeah. What else are you guys thinking before we pass it back over to Dale? Here comes the euro to 107.40, getting close.
Yeah, that's a bit softer than what the market could have been hoping for, especially the banks were not expecting a weaker print. So yeah,
Well,
You know,
revisions as
weigh
well.
sometimes
on that should weigh on the yields.
sometimes when people say something's a no touch, makes me want to grab it with both hands, right? And the euro's a no touch until the election, right? So, I still think that Friday's low is important.
You know what's interesting, and just looking at equity market reaction, the consumer, remember, we're in a consumer driven, economy, obviously. And here, especially here in the US. So the initial response was, the equity markets popped higher, weak data, you get a pop higher. But really, if you lose the
Beta.
consumer,
Yeah.
it I don't know how bullish that is. You know what I mean? I understand where some data will provoke an upside response in equities. I don't know. I don't know if this weak data is necessarily good for stocks today. So it's going to be interesting to see if we can expand on our gains here in the S&P. Especially off of 100, what was it, a 1% move higher yesterday in the S&P. And being up against resistance, I want to see if we're going to be able to expand on that today. I kind of doubt we will. So be careful with risk up here. Ryan, I want to say welcome back. Nice to have you back. Hope you had a great few days off.
Yeah, thanks, mate.
And then and if you guys haven't seen his trade-off show that he just did with Michael Brown today, you should. Kman, always great to have you, and thank you for filling in for Ryan the last few days on the Flow Show. And if you guys don't listen to the Flow Show every single morning with Ryan and Kman, you should. And Dale, I know you have an interview, so is he here? Is Zach here?
Zach is right here.
All
on
right,
deck.
great. Then the Zach attack is here. I'm gonna let you take over. And thanks everybody for being with us every single day. We'll see you tomorrow. And for those of you that are ForexAnalytix subscribers, I'll see you in 45 minutes on the Morning Edge.
Thanks, Blake. Thanks, Stream Team. Ryan. Thank you,
Thanks,
K-Man. And welcome back, Zach Manis. How are you, my friend?
I'm good. How are you, Dale?
Good. Interesting times we're in. Zach, I don't know what's top of mind for you coming in here today.
I thought we'd jump in and talk about metals because that's interests us both, and then we can pivot from that and talk about some equities. I think we align on a lot of those things at the moment. So
Okay, so you know where the screen share is.
yeah, working on finding. There we go. I wanted to start with my ratio chart, the gold to silver ratio that
Okay.
I've been tracking for a while. So we have this really, really large move up from the 2011 extreme
Right.
that we saw where we were at basically a 30-to-1 ratio. And I think we're due for more consolidation. We did get a pullback, but this is kind of a sharp move that I think is just an A wave. And I'm not really looking at this as to project it out, linearly. I think it functions for the most part more as an oscillator, but I do think that we observe, Elliott wave patterns even within some of those oscillators. So even though I don't think that it's heading much lower than the 50 region, initially, and once it gets to the 50 region, I think that it's going to get a pretty big bounce. I'm not looking for it to head, higher than the 120 extremes that we saw from March 2020. I think that was more of an outlier, but looking at this move to continue down towards that 50 region over the next year or so.
Do you believe, Zach, do you believe that the gold-silver ratio correlates pretty closely with the dollar?
I haven't looked at that to see how those line up.
Okay.
But that'd be
Check it
interesting
out.
to I'll take a look at it.
Check it out. Okay.
But in the short term, we were looking for a little bit of a bounce to see some additional weakness in silver as just in the very small degree consolidation. But looking for those to head down and silver to outperform again as the ratio heads down to the low 60s, then another bounce and then lower. And it's interesting, like, people always ask, well, what does the ratio say? Is it saying that silver is going to go down and gold's going to go up, or or vice versa? It's only showing outperformance and just relative strength between those instruments. It doesn't necessarily tell you any specific direction. When we were looking for a bounce, I was looking for a consolidation, a pullback in both, but that it would be a little bit more severe in silver, because silver, had an outperformance, since February, significantly relative to gold. The patterns that we're looking at, I'm expecting to fill out mostly the same, but just at a slightly different degree. So both of them, I'm counting a larger diagonal. I think for that, maybe it's better to look at gold first, because I have that drawn up on a larger degree, clean looking chart here. So that you can see this larger primary fourth wave that came into the 2022 lows. What counts best in my view is an ABC up for wave one and a deep retrace that fits very nicely with our expectations in a larger diagonal, and then filling out a bigger ABC up for the third wave, and then needing a fourth that might or might not overlap, probably doesn't, but just comes close, deeper than normal for a fourth wave, and then another ABC move up for that final fifth that can take us close to the 3,000 level. I don't know if once we get into that fifth wave that we get that, bullish blow off top that metals often get in their final moves, where that does spike up and gold gets to a 3,000 print. I'm not, betting the farm on a specific value there for the actual top. But what's interesting is that in here, the way that gold had more initial strength into the April, off of the October 2023 lows, it counts as further along and closer to the top of this wave three. So looking for a more muted diagonal to finish off that move, as long as support holds. If it does drop down, then I would go back to this alt count where this is all just a very, very large A wave of the wave three. And so that would be more bearish in the short term to get more of that B wave consolidation back to the 2200s. But from there, it can head up more bullishly again. The main difference, though, between gold and silver is mostly just in terms of degree, where silver looks like this move was just the A wave, and this was the B wave inside that larger parentheses wave three, and this whole move off of the May low was just wave one of a bigger version of that same diagonal that we we're just looking at in gold. So this can take silver up to the 40s, low 40, 42 region. As long as it holds, it really needs to hold this 28, 29 region where we held last week, but looking pretty good.
If it doesn't, because we're pretty close.
We are.
What's the revised count if it doesn't hold?
If we drop hard under the 2850 region, then I think we chop further down to the 26s as that alt yellow B wave that we saw on gold.
Okay.
And this would be a higher B wave in a wider expanded flat for the same consolidation. So the A wave stays, the target for C of 3 stays, And just instead of this being the 1-2 start to the ending diagonal, it would be an A, B, C for this yellow B wave here.
Yeah.
And then we would restart and get that 5-wave up move to the C wave of 3, still into the targeting the 40 region, just a little bit delayed.
Got it.
So I know we talk about GDX a lot, but we've talked in the past also about some of the problems with GDX as an index because of its weighting and the size of the relative size of so many of the mining companies. So the TXGM, which is a Canadian global mining index, is something that I like to follow pretty closely. Because it does have a lot more representation of many more of the miners, especially a lot of the Canadian and some of the Australian ones too. And it is less heavily weighted to those larger caps within the mining sector on the American side. You know, it is not as heavily weighted to Newmont and Barrick and a couple of the others. And it has some interesting differences. For the most part, it looks like a very similar pattern to what we're tracking in GDX, treating the low back here in 2020 as a primary wave 2 in a larger diagonal structure, and looking for the rest of this ABC to fill out for the primary wave 3 of that diagonal. And inside that C wave, the intermediate parentheses C, we have a solid 5-wave move up off of the October or September 2022 low, had a pullback to a 618 Fibonacci retrace as the wave 2, and have a solid start to the wave 3 at that minor degree. The major difference between this as an index and GDX and GDXJ is GDX and GDXJ held a higher low nominally and the February low. So their wave 2s can still count here, and they can get a less than desirable wave 1 and can be a more nested count further along. But there are a lot of the individual names that did make lower lows and that look better as their wave 2 equivalent counted into that February low. And this move off the February low just being a larger new wave 1 inside that wave 3. And within that, you know, the GDX, if you're going to count it that way, it's possible you're at the very top region of the normal support. And we'll look at that in just a minute. So you have to allow, you know, to be prudent, you have to allow for another B wave and a C wave to come down more into this normal Fib support region. Whereas this, the global mining index, looks like it's much closer. You could even force a count to be complete for all of this circle wave 2 consolidation into the support that we are already hit. But a little bit more of a bounce and then one more low towards the 113s. I think would be the most ideal there and set up for a really, really nice swing move heading forward in the months to year ahead.
So on GDX, Zach, would it be 31.5, I believe, is halfway back of the whole move that we had?
Yeah, so if you're looking at this purple fib retrace is off of this low. That's the same low we're counting as the alt wave 2 on TXGM. So if we're just at the very top of this normal fib support box, so we can squeeze in an ABC and call that, you know, technically that's enough to be all of that wave 2. So I'm not going to fight any move to the upside, and definitely have a lot of long exposure to the metals and mining sector right now, particularly because of that bullish silver chart. But if we see a clear corrective retrace that only gets to this 36s as resistance, and doesn't look like it's an impulsive move that's setting up to break out over that, then it's time to get a little bit defensive to allow for more of that sideways consolidation into July before it tries again. But at the larger structure, you know, very similar to TXGM, this is a gorgeous looking 5 waves up and a corrective retrace to the 618, whether you count this as wave 2 or this is wave 2. And, you know, when you zoom out, yes, you can get a B wave and a C wave for a wider flat, but it really isn't needed. So any strong move over the 37 region is easily a breakout. And whether you're counting it as that purple larger 1-2 that fits better with the TXGM and maybe with Newmont and a number of other things, or this nested structure already further along inside, the interesting thing that I've talked about with our metals and mining subscribers is that because we're dealing with this larger degree C wave, and whether we're in the nested structure or as a larger wave 1 and wave 2, our targets for this 3 and the rest of 5 of C are the same either way. So it's just a difference of the subwave structure that we see in here. And if this is this larger purple wave 2, then we're going to get another 1-2 here before we get the full-on breakout to head up to the 50s. But pretty important support in this 31 region. But would like to see at least a good bounce back towards 36s pretty soon.
Okay, thank you.
From there, you want to take a look. I have another ratio chart that we can talk about, and that's the ratio of the S&P to gold, which also looks like it's due for a pretty significant consolidation that might have started back here. I think we looked at it again, over a year or so ago. We had an initial move down that looked a little bit deeper than a fourth wave, and only a corrective move up so far. Couldn't break down under that moving average, and instead got another nominal extension higher to count as a better fifth wave of that fifth. Only 3 waves down so far, but we're looking for a bigger corrective move, so that doesn't have to start as an impulsive 5-wave move down, an Elliott wave. But off of that initial move down from this high, we're filling out a pretty clear corrective bounce here that looks very, very close to being complete. Snap this to the actual.
So this is saying that the gold is going to begin to outperform the S&Ps.
Yes, and again, if we're talking about a ratio, so that doesn't necessarily mean that the S&P has to drop suddenly, or that gold has to take off, but it could be some kind of combination of relative weakness for the market, for equities in general, compared to extra strength in the metals than what we've seen so far. So it could get a little bit more of a fourth and a fifth wave up towards this 2.37 ratio fib level at the 764, and even allow for a little bit higher than that, but certainly could count this complete as a WXY instead of an ABC. The difference there is, we usually, our default is to look for an ABC move as most corrections. Sometimes you get C wave should always have 5 waves. Sometimes you get something that decides to be complete when it only has 3 waves inside what should be the C. So usually after the fact, you have to go back and say, all right, that didn't give us 5 waves of the C wave, so we have to count it as a WXY. Okay. Not usually something that you can heavily rely on, so I'm going to leave room for that to get more of a fourth and a fifth wave up inside that C wave. But now that we're talking about the equities, I think the S&P, or we'll talk about ES first, is very, very extended. And I mean, I don't think it's very, very extended. I think the perception is that it's very, very extended because we had a couple of moves that looked like they could have been putting a top in place. And then, we were looking for corrective bounces, and then the start of another move, and then a corrective bounce from there. And that corrective bounce turned into an extension. And then we filled out that extension, and now we have another little extension on the end of that. But this extension off of the April low looks very, very complete as 5 waves up. So it hasn't shown any signs of breaking support yet. But like I'm looking to say where the weakness is going to come from, because this does look like a complete move. And so sure, it can continue to extend, but what's the main driver, and what does that look like? And then where is that weakness looking like it might rear its head from? And I also like to look at the equal weight and say, that similar to what I think Blake was talking about, that XLG chart, that I think that it's 2 sides of the same coin. The XLG chart that he was talking about is just the most heavily weighted things that are performing the best, and what their chart looks like. This is trying to smooth out that distortion and put everything on an equal playing field, and look at the market as a whole without the extreme weighting to some of those very large cap tech companies. And the very interesting thing that I see here, similar to the Russell and the Dow that you were talking about, is we have a lower high and then considerable significant weakness since then as well. So that lower high in May is only 3 waves up, and then continuing to make a couple of lower highs from there, while other things are making new highs, is potentially very, very telling. So seeing is the RSP is showing signs of the initial stages of a bigger consolidation starting.
Okay, it's come through the grapevine to me that Avi has been bearish for a while. Still bearish?
I mean, I think that a lot of people have difficulty parsing out the differences in degrees in the way we talk about Elliott wave. So we can talk about a larger degree top forming, but still be looking at a smaller degree and showing where support is for further extension, or looking at a very, very small degree saying, if this is going to turn into a top, here's the path that it needs to take, and if we get over that resistance, then we can be back into extension mode. So I think a lot of that, that perception is more of a disconnect in understanding how we approach different structures in Elliott wave, and looking at a bit macro degree and saying that things are, risk skew from a very, very high level is very unfavorable for being super aggressive. But still looking for those opportunities where things might continue to extend from.
I mean, what I heard, and you could push back, but what I heard was peak. I think he thought maybe the April high was it, and then we had retracements.
Right.
Then even at new highs, I still looking at it as an expanding flat, and he was looking for 3,500 before the election, and then a rally into the election, and then
I mean, I was
1,500 after that.
I think we've been in pretty bullish extension mode, looking for higher highs for a while. Especially, I was very, very bearish back in November, but once we didn't turn down from that retrace off of the July highs from last year, a lot of that went out the window. We've still been looking for some individual shorts and looking for some weakness in some places. And
well, you could have a different view than Avi, even though you work together, right?
True.
But that was his view, wasn't it?
Right. At the time, I think once you get over some resistance, then you stop looking for a significant top.
He's not bearish anymore. Okay, I'm interviewing you anyway, but I mean, it was a pretty aggressive call. And who knows? Still play out. Expanded flats. This one's been going on for since the October lows of last year.
Right. Right.
So
No. I think it's. I think once we got over the July high from last year, he wasn't looking at it as a B wave anymore. He was looking at it as a 5th wave extension, and so then looking for the further extension targets, which is what most things other than the Russell that still looks like a B wave.
So it's extended too much. The S&P's on this recent rally to be in a regular B against. Say the high at 4,800, then the decline and new highs being in a regular B with a C to come.
I mean, if depending on the degree, so like the NASDAQ, we're looking at it as just being a cycle degree wave 3 topping. And so if this high back here in 2022 was actually the top, then technically this could still be a B wave of an expanded flat for an ABC flat for just a consolidation off of this high, and then continuing a lot higher. The S&P we're looking at as a much larger degree consolidation topping, this super cycle wave 3 top off of a cycle wave 5 from the 2008 lows. So that top should not have an expanded flat as the start of an A wave inside a larger A wave of a consolidation. So on the S&P for sure, once it took out that July high from last year, then it was very, very highly likely that it was going to take out the high from 2022, and then you're into an alt fifth wave extension. And so then looking at, where's that extension, what's driving that extension. And I think,
Okay.
we talked about the weakness in the Russell, the strength in the market has come largely from this huge extension in in
semis.
semiconductors, right?
Yeah.
NASDAQ as well, but like this is the main driver of that of that tech extension. And this really looks like 5 waves up off of the April low. And a lot of this was driven by NVIDIA. There's some very noticeable divergence between AMD and NVIDIA now. And there are some good setups for these to head long. I told my members that I just got out of my SOXL position that I scalped again from 2 weeks ago. Because this looks very, very complete. So I had been moving up the stops, but so far it's not showing any signs of cracking. But this, when you're zoomed in on a 1-hour chart, it doesn't look so extreme. But when you back up at much larger degrees and set things up with like Cisco charts from the 1990s, it's very, very concerning that it doesn't take a lot of a break of support for something that is so extended to the upside to have a pretty major reversal. That doesn't mean that anybody should go out.
One big range down day would break that whole trend. Is that what you're talking about? Yeah. Go ahead, Zach.
Oh, I was just saying, I wouldn't go out and short NVIDIA because, we don't have any evidence of a top in place, and that could be incredibly dangerous. But, I do think that that's where the first initial, like real significant weakness could rear its head from.
Okay. So you're also looks like bearish on XLF. I wanted to ask you about TLT. And the action we've had the last few weeks, to me, even if we pull back, it looks like, this recent low that we've had could take it back to about, I don't know, 105 or so. And actually, I can make a case for 120. So I was wondering what you're thinking about.
I'll pull up TLT. I look closer at the subwave structure on the
bonds,
the
notes,
30-year futures. Yeah, exactly.
Okay. All right.
But it's mostly the same. And looking for whether this is a corrective retrace for a larger degree bottom. I think the structure is going to be the same, and we have an A wave up, we have a B wave consolidation, and are trying to get this C wave started that can take us up towards the 110 to 112 region on TLT, and are still working on filling out more of just wave 1 in that larger swing move. So I think this was the top. The futures certainly look more like they've started this 4. So inside this is 1, 2, 3, 4, getting a 5th wave up for a small leading diagonal for that wave 1. And then another consolidation back here into the 92 to 90 region. And then they can take off to the upside. But right now, short term, looking for consolidation that should hold about 92s. And then a move up towards 96s for the rest of is an ABC up for that 5th, and then a bigger ABC back towards the 90 region, and then we can get a more impulsive looking move after that.
Okay. All right. And you know what is a lot of people aren't talking about energy anymore because it's hard to understand what's going on. We had that OPEC meeting and they crushed it, and then we were back above it. And then we had a little sideways consolidation, and then it's starting to go. Well, there's a view. Okay.
Right. I'm going to go out to the larger view here because we're very, very bullish on energy. We're bullish in the short term for another high that can be, because you're dealing with a commodity, that can be a blow off top. And you saw on the other chart that I had a smaller degree pink AB here. Which is for a larger version of this A wave that can take this even higher for that wave 1.
Where's that come in? 140? 120.
Yeah, I mean, I think 120s is the conservative larger degree view right now. There's a lot of individual energy charts that were very, very bullish in stock waves, and most of our bullish wave setups lately have been in the energy sector. We have a lot
Okay,
of short
interesting.
wave setups that are playing out, but there's a couple other things that we're bullish on, like airlines and some other stuff, which will be
Okay.
interesting to see how, that's a sector that is very heavily dependent on energy prices. But
Yeah.
After this short-term move, that should take us probably the rest of this year to fill out, it might even drag into early 2025 to finish the rest of this fifth wave off. We are looking for consolidation back into the 64 to 43, which will, these fibs will change based on where
Well,
this fifth wave ends
that's a
up.
quick, powerful move from where we are, about $40. Is there anything geo-wise that you think could be the spark for this, for it to happen? And I don't know if it's going to come from, China's rebound of economic growth and demand. Wouldn't you think that there might be some kind of supply shock to drive that?
I hope that, the normal like things that we think about in terms of being the events that spark some runs in the energy sector, I hope that a lot of those things don't kind of happen, because usually they aren't good for a lot of people.
Well, doesn't every recession start with a high, like, some type of oil crisis? Almost everyone does.
I
Happens
think
after
so.
them. Yeah,
Right.
so that would set the stage for
Certainly
a
would.
recession. Yeah.
Certainly would.
Very interesting presentation again, and thanks for letting me grill you about something you didn't even say. But I
Right.
hear
No
I talk
worries.
to a lot of people, and I have a lot of friends and traders in the business, and I can't, when they tell me something, I can't say, well, don't tell me that,
Right.
so I listen, and it's and people should listen to you, Zach. So
Thank
what's
you.
the best way for them to do it, to keep in touch with
Stock
your work?
waves,
Okay.
either at Elliott Wave Trader or on Seeking Alpha in the marketplace there, or
Oh, cool.
at Zach Mannes, ZACMANNES on Twitter,
Yeah,
or
X.
X if you X.
Yeah, it almost sounds like a divorce, doesn't it?
It
Twitter's
does.
now an X. Anyway, don't forget to get your alimony check out. Zach, great to talk to you, and
You too, as always, Dale.
I'm a fan, and appreciate you
Thank you.
coming here over the years and sharing your excellent work with our community. Thank
It's
you very
always a
much.
pleasure. Have a great day.
All right, everyone, follow Zach at Zach Mannes, Jack Mannes on X, and that's a wrap. Good luck the rest of the day. You could be with the team in 13 minutes, and keep an eye on that oil. Some decent looking moves coming out in the last month. I think they washed out the bulls, and now they're squeezing the bears. So good hunting, everyone, and don't just count your pips, count your blessings. See you, Sinatra, Laura, the rest of the crew.